Next question is from Peter. He says, we bought a house at the height of the market, but we're able to snag a sub 5% mortgage rate. It doesn't feel like our quote unquote forever home. What should we do next?
Honey, we're missing some variables.
What?
I wanted to see what you would say. I think, let me tell you how I thought about this. He's got this low interest rate. Mm-hmm. He knows he wants to buy another house. And it's hard to give up that interest rate.
Sure.
How does he know when it's the right time to do that? And is it worth it because the interest rates are now higher? Well, what do you think about that?
Here's what I think. Peter said he bought at the height of the market. Mm-hmm. So what that tells me is that this has been a recent purchase, likely in the last 3 years. But he said he got a sub 5. So I'm thinking this is probably like 2 years ago if I'm using my, my sort of mental math here. So he's in this home for 2 years. I think the first thing that you should think about is, okay, when it comes to buying a home, we actually have an entire checklist. You can go to moneyguy.com/resource, check out our home buying checklist. One of the things that's on our home buying checklist is when you make a real estate purchase, it needs to be a longer term decision. So you need to say, okay, when I buy this home, I need to commit that I can be here for 7, 8, 9, maybe 10 years, so that even if I buy at the height of the market, and maybe the market settles and softens, I'm in this home enough time to give it time to either rebound or for me to build equity inside this home. So one thing I would think through, Peter, if I were you, if you bought at the height and you have this sub 5% mortgage, you might really ought to be thinking through, okay, is this the house? It may not be my forever home, but it's probably my next like 4, 5, 6 year home. What steps can I be taking if I think that in the next 5 or 6 years, I may want to upgrade? I don't think that the upgrade decision is something that's going to happen in the near future based on the fact that he just bought. Agree with that?
Love that you Encyclopedia Brown that to the years, because that's exactly what I was thinking. He just bought this house in the last 2 to 3 years. He probably still has another 4 to 5 years of ownership. Mm-hmm. And time is going to be the biggest, smooth out volatility and all the bumps and all the craziness of the current situation. Because we just came through an inflationary period. Time is your friend. I mean, I've shared with you guys my personal walk with real estate was that I got into a house that got tons of negative. I prepaid all my negative equity is essentially what I did, is because my house in Georgia, it just got crushed in the Great Recession. Mm-hmm. But the good news is that I lived in it long enough. I paid down enough of the debt that I still got a check when I sold that house when I left. So I think that your concerns, Peter, about maybe you topped the market on the price, but you got the benefit of a lower than market rate now in interest rate. So your cash flow probably still reflects a good situation that you're in, but the price and the fluctuation of value will moderate the more time we can get away from this. And that's why, like, when you invest, you don't put anything in financial markets unless you can walk away for at least 5 to 7 years, because in the short term, there might be too much fluctuation. The same thing's going to happen with the real estate marketplace. Since I think you're in that halo of being in this house for another 3 to 5 years, just let things moderate. But in the meantime, do exactly what Bo said. Firm up your journey with the financial order of operations. Because let me tell you what makes housing decision easier. When you have a big financial foundation underneath you, it gives you margin, it gives you flexibility, because you're not having to cut everything by a razor thin margin. And that's why I would use these next 4 years, firm up your life, use the financial order of operations so that you can be living your best life and have the flexibility, have the cash reserves to be able to make all the moves you need to as your family grows or your life changes, or your life needs change.
I love that. And look, real estate and housing is a hot button topic. So one of the things that we've committed to as a team here is we're going to stay on top of it. We're going to stay on top of interest rates. We're going to stay on top of price movements. We're going to stay on top of the best way for you to get into a home. So if you want to make sure that you stay on top of the things that we're staying on top of, one of the great things you can do is subscribe right now to the channel so you can be notified as we put out new information, as we do new housing stuff, so that you can know what's changing in that landscape.
I almost thought you were going to say stay on top of that notification button too.
There we go. Bing, bing, bing.
There you go.